So what happened to the bond market this week? I mean, we have the 30-year that set a new record low in yield. You have the yield curve inverting on the 2s and 10s. You have any number of indicators that would suggest there's something wrong. So what caused this?
It's largely outside the United States and largely inside the United States around the concerns around trade and manufacturing. And so if you think about, you look around the world, there hasn't been a lot of great news lately, whether it's the Brexit situation, which just doesn't seem to settle down, Europe slowing down, and the Europe Central Bank saying we need to slow down, China slowing down, the impact of the trade war across the regions, the need for companies to restructure their supply chains to avoid the tariffs, which means they're spending money to just move things, not really spending money to produce new products and new capabilities. And so that debate, and then more importantly, the debate about the debate. So the old saying, we have nothing to fear but fear itself. We have nothing to fear about a recession right now, except for the fear of recession. And that's what's really going on. You're seeing a lot of people, look ahead and say, if trade war continues, if this doesn't get solved or that doesn't get solved, you could see this finally getting to the consumer confidence, which in the U.S., which is actually the critical thing to maintain. The business confidence has come down a little bit, but still very strong, especially small businesses and medium-sized businesses. They're fine. It's just that they're a little more worried about what's going on around the world.
Can the United States keep this going by itself? I mean, you had Germany actually with negative GDP growth last quarter, and you have China, as you said, slowing down. Is it enough for the United States to keep going, or at some point does it become contagious?
I think if you go back and look, people say, what's this environment like? It was like 3/4 of this decade so far, if you really think about it, where the U.S. economy was recovering and growing, and yet the economies around the world were struggling. And then we had synchronized growth for about a year, if you remember, a few years back, and when Europe started growing, and people felt good about Europe as it moved above 1 to 1.5, and people were feeling good. So I think the reality is the United States can help push along because it's sheer size. The U.S. spends on healthcare what the entire Indian GDP is. So, and that's the 5th or 6th largest economy. So think about that context. So as long as the U.S. goes, it can help. It would sure help if Europe, which is a similar size economy, add all together, was growing faster. It's slowing down, and that's the reality. So I think it's tougher sledding for the U.S. economy to carry its weight today. And then the additional uncertainty around trade and how it's going to impact business plans and capital investment is really the concern. But the U.S. can do a lot to carry the world. It's just that it has to really be set up to really be pushing.